Yo, what's going on, guys? What's good? What's good? What's good? What is going on? All right, so we are finally on stream. One sec. Let me go ahead and put out here that I'm live on YouTube, so you guys can obviously tune in and actually hear me talking. One sec, guys. Give me 1 second here, man. But yeah, hold on. Let me add everyone here. Give me 1 second, guys. Give me 1 second. There we go. Let me put it out in this server real quick as well. Oh my god, my cat just jumped over my keyboard. But yeah, hopefully you guys are having a wonderful day. I have a lot of stuff that I do want to review with you guys. So let's get to doing that, man. Let's get to doing that. But yeah, what's good? What's good, man? What's going on? What's going on? All right, but anyways, okay. So guys, today, okay. So I kind of want to start doing a little bit more behind with the community as well. So I want to start implementing a lot of these like end of day kind of reviews, setting up for the next day, reviewing the chart, reviewing the trades that we caught, the trades that we might have missed, stuff like that. All right, so we're more aware going forward. You know what I mean? But yeah, man. But anyways, here in the meantime, while you guys join up, guys, give me 1 second. Let me put something here on the TV so I can chill out for a little bit. You know, a little bit of music here. Let me see what we got here. 1 sec. What's good, man? What's good, Brian? What's good? What's good? But yeah, here, let me go ahead and put this over here. Oh, I got an ad, of course. But yeah, pretty much what I want to review with this stream for today, guys. And keep in mind, I'm gonna try to do these every few days, every so often. Pretty much, if I'm seeing a setup for the next day, I'll go live, I'll explain it, I'll help you guys out in kind of understanding it and what to expect. You know, the whole 9 yards. And if we catch a trade for the day, we can definitely what's it called? We can definitely review the trade. All right. Your videos are nice. Thank you, bro. Thank you for the kind words, my man. Thank you. Much love, bro. Much love. But anyways, all right. So guys, let me know in the chat. What do you guys want to review? Why not Discord? I feel like YouTube is easier, bro. It's recorded. You know the whole thing. All right, man. But anyways, what would you guys want to review for today? Would you guys want to start off with the setups for tomorrow, or do you guys want to kind of review a little bit more about the trade that we caught today? As you guys know, it did play. It worked out, but we ended up getting stopped out due to the chop, and I know exactly why. So let me know what you guys. Let me know what you guys wanna do. Whether you guys want to do the trade that we did. Review the today's trade first. I got you. All right, we'll just do that instead. Hold on. Let me move my cat over here because she keeps distracting me, man. Go over there. Anyways, all right, guys. So right bias, bad volume. Yeah, pretty much. But I'll show you guys right now. All right, man. So guys, so pretty much what ended up happening today, guys, is today coming into market open. Obviously, as you guys see right over here, we had a pretty nice bullish bias. As you guys see right over here, we just had straight buying since the 9:30 candle all the way into pretty much, like maybe 30 minutes into market open. All right. Now, first things first, guys. First thing that you guys always want to do or always want to have ready before the market opens is always have your levels of liquidity marked out. Always, right? This is good. This is pretty much going to tell you everything that's happening in the market, right? Whether we take out a level of liquidity to the upside, or the way we react off that level of liquidity, it will depend as to why we want to go up, or why we want to go down, and all that stuff. All right, guys. So pretty much what I ended up seeing today, guys, is before the market opened. I'm sure you guys know, but I ended up getting on at 9:15 a.m. Eastern Eastern time to pretty much help you guys get started and get your chart ready for the day, right? And I'm gonna start doing that a lot more often, just so we are a lot more like organized and a lot more well prepared in the morning. Because I'm not gonna lie to you guys, man. There are some mornings where I start the stream at 9:40 and there's a setup. I'm like, oh guys, I can't even explain it. We just have to take it. You know what I mean? So yeah. But let me see here. There's no, bro. I just got another ad on YouTube, bro. Anyways, all right. So anyways, guys. So coming into market open today, pretty much the way I find all of these levels of liquidity is I pretty much start off always on the higher time frame. For me, I personally prefer the 1 hour time frame where you get on earlier than 9:15 a.m. Tomorrow I'm gonna try to get on at 9 in the morning. I feel like it'll give me a lot more time to really organize, really answer questions, because I'm not gonna lie to you guys. A lot of you guys love to ask me questions in the middle of the trade where I can't really answer nor focus on them. So I feel like if I start a little bit earlier, it's the best of both worlds. Not only do we prepare, and we're also very, very organized with the questions and everything. You know what I mean? But yeah, here, let me go ahead and put this over here. There you go. Okay, bad. So yeah, so guys, for those that don't know, pretty much the way I don't know if you guys are in my Discord or not, but every so often in my Discord, I'm always like, oh guys, like I'm seeing an A plus setup for tomorrow. And I'm not just saying that to say that, you know what I mean, to build up hype. Well, in a way I am, because I obviously want to get you guys excited to trade. I mean, it's my passion, and I'm sure it's a lot of you guys' passion as well that you guys are trying to get the hang of. All right. But I don't only do it for the hype, guys. I'm actually seeing something. So a lot of you guys always wonder, like, yo, can you tell the future? Like, how do you know? Um, how do you know that you're seeing a really, really good setup for the next day or for tomorrow or for 2 days from now? All right. And mainly it's because of the levels of liquidity, right? So the way I pretty much do this, guys, is every day coming or every night or the morning of, let's say, right? The morning of coming to market open, pretty much what I do, guys, is I pretty much go on the higher time frame. Like I said, I personally prefer the 1 hour time frame. And I pretty much just mark out all of my levels of liquidity that are nearby. So today, for example, for those that don't know, yes, I'm on the replay feature right now because I'm pretty much just simulating what was happening before the market opened up today. I'm sure we all know that the market went up today, but let's just imagine that it didn't, and we don't know that yet. All right, guys. But anyways, let's see here. So coming into market open today, guys. Like I said, I keep repeating the same thing. Yeah, we're on the 1 hour time frame. Pretty much what we do, guys, is we mark out the swing high and the swing low. Now, for the people that don't know what a swing high or swing low is guys, when you have your chart like literally on your screen and you zoom out, right? Pretty much the lowest point that you guys see on your chart, that's gonna be your swing low, and obviously the swing high will be the vice versa, which will be to the upside. All right, so in this case, guys, what we pretty much have here is we're going to start off with the level of liquidity all the way down here over at 22,582. Honestly, that's a pretty realistic level because, you know what I mean? I mean, it's pretty far away, but we could definitely see it if the market does sell off today off open, right? But yeah, we'll pretty much just get started with this level right down here. Right now, for those wondering, okay, well, how do you find your levels of liquidity? Well, it's actually pretty easy, right? So let's say, for example, once again, we're going to start off with this swing low all the way down here over at 22,582. Right, pretty much what we're going to be doing, guys, is obviously here we can see that the market is in a very nice uptrend here, right? And bro, my cat is loafing right in front of me, bro. Bro, she keeps distracting me, man. But anyways, all right. So yeah, we're gonna get started from here, guys. And obviously, here we can see that the market just continues to create higher highs and higher lows constantly, pretty much just confirming that the trend is in a bullish trend. Obviously, right? The market is steadily just going up, right? So in this case, guys, in the way we're gonna find all of our levels of liquidity to the downside, guys, is you're simply just gonna mark out every single pullback that the market had as it was going up. So let's say, for example, we're gonna get started from this swing low right down here, right? So going forward, let's go ahead and mark out our levels of liquidity. All right, so we're gonna get started right over here. We can see that the market pushed up, pulled back down, found this low and pushed up even higher, created a new high right over here, pretty much creating a new higher high from the previous high. All right, so this level of liquidity, this level right here will be a level of liquidity. All right, so right here, we're going to label this as our swing low DOL, right? And then this right here, since it's not really in Asia or London, we're just going to label it an external low. I'm sure we have some extra lows around here as well. But yeah, and by the way, now that I'm looking at it from today, guys, we pretty much already took out this level of liquidity, so there's really no point in marking out any of these levels. But don't worry, guys, I'll be showing you for the setups for tomorrow, which we'll be marking out in just a second. I'll show you guys how to find the levels of liquidity, you know, with how the market is moving. All right, so yeah, pretty much coming into market open, we kind of already saw that we had a bounce here and we have the swing low right down here. All right, but the one thing that we're missing for today, guys, is we're missing all of the levels of liquidity to the upside. We don't really have any marked out other than this one over at, oh wait, she just clicked on my keyboard. We have the one over here at 23,845. All right, let me catch up with the chat here. Someone said here, you should have a Q&A channel like Lonto where people can post questions and have a weekly Q&A stream. Honestly, that's not a bad idea, honestly, man. Lonto's the GOAT, bro. Huge shout out to him. But yeah, that's not a bad idea at all. But anyways, so here, guys, pretty much coming into market open, on the 1 hour time frame, it kind of seems a little bit complicated to find some levels of liquidity to the upside, as all of these levels are kind of just squished together. And what I mean by this, guys, is, I mean, look at this, right? This doesn't really look like a strong pullback on the higher time frame, but if you look at like the 5-minute time frame, it looks like a way better pullback, or like the 15-minute, for example, right? It looks like a way better pullback around this range and around this range right over here. All right, so coming into market open today, guys, pretty much the way I found all my levels of liquidity is we have our London high over here, right? We had our London high drawn liquidity right over here. We have our internal high right over here, right? And let me see, internal high deal right over here. And guys, the reason as to why this is an internal high is because this level is sitting right below the London high, so it's inside of the range. All right, guys. So yeah, we have the London high, market sold off, pulled back, found the internal high, sold off, pulled back, found this other internal high right over here, which we're gonna go ahead and mark out just like this, right? So we have the internal high DOL right over here. Then the market went ahead and sold off once again, pulled back, found this high and sold off. So this will be our next level of liquidity right over here, internal high DOL, right? Then the market sells off once again. We have a little bit of chop here, nothing crazy, you know what I mean? But now here is where we have our Asia high drawn liquidity, which we're gonna go ahead and mark out just like this, right? So we're gonna have our Asia high drawn liquidity right over here, Asia high DOL. And let's see what else we got here. All right, so the market sold off. I wouldn't really mark, actually I would, because right here, guys, although it doesn't look like a very strong pullback, it technically is, and it's also a session high. As you can see right here, the indicator is marking out that this is a London high drawn liquidity. So we're gonna go ahead and mark it out just because you never know, right? So yeah, let's go ahead and mark this out as our London high drawn liquidity right over here. All right, guys. So yeah, pretty much coming into market open, we're kind of ready, but not yet. All right, guys, because remember, we still have some levels to pretty much mark out over here, right? So once again, guys, we have the London high right over here. Market sold off, pulled back, found this other high, which will be an internal high as well. And in fact, anything above here, guys, it's all going to be external. So instead of internal, we're going to label this as external. Not that it's really a difference. It's just a name, but just so we're more organized, of course. External high drawn liquidity. Let's label this as external high drawn liquidity. And another external high. And guys, the reason as to why I'm marking these externals right over here instead of internals is because obviously these highs are above the session highs, right? So we have last night's London and Asia session right over here, and then we have other levels above, which is outside of the trading range, making it an external. All right, guys. But yeah, now here what we have here, or what we have here, guys, is obviously we have the Asia, we have the London, and now we have an internal high right over here over at 23,167.50. All right, guys. Now, this is where the reviews start getting a little bit nice here and more understanding. All right, guys. So we have the internal high drawn liquidity over here. There we go. And before we forget, let's go ahead and mark our Asia low right down here real quick. Asia low DOL. And let's mark out our London low. Now, this is where a lot of you guys might be getting a little bit confused here. All right. And the reason I'm saying you guys might be getting confused is because the indicator is marking out that we have a London low right over here. Right? But if I were to ask you guys, is this a low in the market? No, it's not. And the reason I'm saying it's not a low in the market, guys, is because there's a difference, right? The London session started in this candle, and the lowest point that this candle went to is this one right here, which happened to be the lowest point during the London session. All right, but does this mean that the market pulled back? No. The actual London low, or the low around this session, is now over at 22,978. It's in fact over here at 22,947.50. Because guys, pay attention here, right? We have the main low. We pushed up, pulled back from the Asia low. We pushed up, had a nice pullback right here. We found the low here, and then we pushed up even higher. All right, so instead of marking out the London low right here, you're gonna mark out the London low right down here instead. All right, guys. So hopefully that makes sense to you guys. Let me see. Are his calls accurate? I'm sorry, I'm new. Bro, I mean, I would say so. I mean, everyone has their own opinions, but if you want to see results and everything, my man, everything is in my server, which is completely free if you obviously want to check it out. So here you go. You can check out everything in the announcements. I post everything win, loss, or whatever. It's also streamed on my YouTube. All right, so hopefully that can help you out. All right, guys. Anyways, guys, okay. So yeah, so now, guys, we are pretty much ready to start the day, right? We have all of our levels of liquidity nearby pretty much marked out. Now it's pretty much just wait for the setups to form and for the confirmations to come along. All right, guys. So coming to market open. Thank you, my man. Thank you. All right, guys. So yeah, anyways, coming into market open today, guys, pretty much what we had here is, let's go ahead and go over to the 5-minute time frame real quick. So looking at the 9:30 candle, which should start right around here, right here. All right, guys. So yeah, anyways, I heard, bro, thank you guys for the vouchers, man. Thank you. But anyways, man. All right, so guys, what we have here, right, is coming into market open, we pretty much formed an insanely strong buying candle, which if we measure it out, it's well over 40 points, or not well over, but it's over 40 points, which in fact, it's exactly 42 points, which is which pretty much just makes it a valid imbalance. All right, so far we don't really have of too much confirmations, but check this out, guys. All right, so for those wondering why I went long this morning, right, and why I wanted to trade into more upside, is because, guys, coming into market open, I myself, I had a bullish bias. All right, now let me show you guys exactly why I had a bullish bias and how exactly you guys can find your bias off open. All right, so I don't know if you guys remember this, but literally like 5 minutes ago, I told you guys that I was looking for, or when we were marking out our levels of liquidity, I told you guys not to mark out a certain level because it already got taken out. All right, but that level ended up getting taken out pretty much last night or on Friday, if I'm not mistaken. Right, and that level was all the way. If you go on the 1 hour time frame, you guys will find the level right over, if I'm not mistaken, like right over here, right? Yeah, it was this one, the lowest of the low, right? So we have this low, we have this low, and we have this low, right? But obviously this one is being the lowest from these three right here. All right. But guys, check this out. Check this out, right? So on the higher time frame, pretty much what we had here, guys, is on Friday, we ended up taking out this level of liquidity towards market close right over here. We took out this level of liquidity, we ended up sweeping it, and we formed an MSS model. Now, for those that don't know what an MSS model is, it's pretty much it stands for market structure shift. Pretty much the way it works, guys, is when the market is trending in a certain direction, in this case, it's trending to the downside, as you guys see right here, right? As the market is trending to the downside, it's pretty much just targeting these levels of liquidity that I never took out as the market was going up, right? So think of these as like objectives or as like magnets, right? I like to think of them as magnets, all right? Now, the more levels of liquidity that the market takes out, the weaker that trend typically gets, because the less objectives they have, right? So let's say, for example, right, the trend starts up here. Obviously, when the trend is starting, it's going to be as strong as possible. But as we take out more levels, notice right here, right? So this right here will be our first level of liquidity, right? Notice how when we took out this level of liquidity, the market ended up trying to reverse, right? Then we took out another level of liquidity, the market tried to reverse. And notice how sellers are getting weaker and weaker and weaker and weaker and weaker as we go on. So it's going to get to the point where they're going to take out so many levels of liquidity in that direction, to the point where they're no longer going to be interested, and buyers are going to take control, because obviously buyers are a lot more interested into the levels of liquidity above, which will be all of these up here. All right, hopefully that makes sense. All right, so pretty much what ended up happening on Friday, guys, was obviously, you guys know, on Thursday the market for some reason sold off like crazy, and then the sell-off also continued on Friday, pretty much just making the market go down like crazy into all of these levels of liquidity. All right, so coming into today in the morning, guys, pretty much what we ended up seeing was that we took out all of the nearby levels of liquidity, the most important one being over at 22,775, and the market actually had a bullish reaction right over here. All right, so pretty much what ended up happening was we sold off into all of the levels of liquidity. We took out the final level of liquidity right over here. The market took it out. It's starting to hold above. We're starting to sweep it, right, as we're holding above, and buyers are stepping in, pretty much confirming the MSS model, pretty much making the market go from creating lower highs and lower lows, which also stands for a bearish bias or a bearish trend, into taking out the levels of liquidity and then creating higher highs and higher lows with a bullish trend. All right, so think of it as kind of like a U-turn in price, right? So the price is going like this, right? Like a U, right? Like a U-turn. Like if you guys drive, which I'm sure you all do, you know what I mean? That's pretty much what it is. All right, guys. So yeah, pretty much coming into market open today, my bias was like, okay, well, you know what I mean? We took out this level of liquidity. In fact, we took out a bunch of levels of liquidity from last week. The higher time frame looks pretty bullish as the overnight session pumped up over 200 points. We took out the levels of liquidity. We have the MSS model. We have the buying pressure kicking in. We look pretty good. And in fact, guys, we haven't taken out any level of liquidity to the upside, which pretty much means that we have them to go higher. Like, it's like pretty obvious, actually. It's like pretty easy to read, right? That's what it looks like. Well, coming into market open today, guys, I use this exact bias from this DOL sweep right over here to have a bullish bias coming into market open, to at least take out this internal high right over here at 23,167.50, and, you know, maybe some other ones above, like the London and Asia high above over here, right? All right, guys, well, check this out. All right, well, check this out, guys. So coming to market open, obviously, you guys know we had a beautiful push up right over here, right? And I'm like, okay, guys, well, you know, I mean, we just created an imbalance. Let's see how the next 5-minute candle opens up, and if since we have so much buying pressure kicking in, If the next 5-minute candle opens up and we don't take out this level of liquidity, we could look for a nice retracement into this fair value gap and wait for a nice bounce into the level of liquidity above. This would have been the most perfect setup of the day. Why? Because guys, we have room for higher. We haven't taken out any levels of liquidity. The market just opened, which means that the volume is going crazy and the buyers have full control of that crazy volume. All right, which is pretty much like every single probability that you can probably think of, it's all in your favor. All right, guys. So what I pretty much told everyone is like, okay, I'm like, okay, guys. Well, what we want to see here is let's go ahead and wait for the next 5-minute candle to close. And unfortunately, guys, what ended up happening was, yeah, we were right about the market going up into our target up here, but the problem was, guys, it was just way too strong. We not only could we not afford a pullback into the fair value gap, which would be right over here, but there was just way too much buying pressure, and we just ended up taking out the price target before the fair value gap even closed. All right, guys. So we can't really do much around here. All right. So what's the next step? You might be wondering, okay, well, why don't we just look for an inverse, right? And that was my idea at first. Because I was like, I'm sure you guys remember on stream, I'm like, okay, guys, well, we just took out this internal high right over here. We have a fair value gap that we can go ahead and inverse right over here. If we can get enough selling pressure, we can probably look to take shorts from here all the way down into like these levels below, like the London and the Asia below, and maybe even this one, the external liquidity right over here, right? It wouldn't look so bad, right? Which let me go ahead and mark up for you guys real quick. There you go. Right? So yeah, this setup would have looked like actually A plus 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 plus. Like it looks amazing, right? Because the way it would have looked like, guys, was obviously the whole reason as to why the market is going up is to go ahead and take out the level of liquidity above. Now that the level of liquidity above got taken out, what we can look for is a rejection from here, a DOL sweep, an MSS model to form more like this. And then we just look for enough selling pressure to inverse this very strong bullish fair value gap right over here. To then take shorts here, to then look to take shorts into our price targets all the way down here, right? Looks like a pretty good game plan, right? Well, the problem is, guys, with today at least, what the problem was is we took out the level of liquidity. We had a little bit, just a little bit of a bearish reaction, and we went back up. You know what I mean? So it just means that buyers are still in way too much control. All right, now I will catch up with the chat in a second, guys. Give me 1 sec, right? But pretty much so a lot of you guys have this question, right? And I guess I get asked this all the time, right? What happens or what should I do when the market goes up into a level of liquidity? It takes out the level of liquidity, but we still continue going up. Well, guys, it's actually a pretty simple answer. All right, unless you're trading at all-time highs. Guys, if you take out one level of liquidity and it seems like in the market seems like it wants to go even higher, you're going to remain bullish as long as the price holds above the level of liquidity. You're going to remain bullish until the next level of liquidity above gets taken out right over here. Then you're going to look for the same exact reaction. When we take out this level of liquidity right over here, you're going to ask yourself, okay, what type of reaction are we getting from the market? Are we rejecting off this level? Or are we holding above it? And if we're holding above it, we're going to stay bullish until the next level gets taken out, which will be this one right here. Or if we're holding below it after we take out that level of liquidity, we're going to be looking for a reversal. My cat just, chill. We'll be looking for a reversal if the market obviously rejects back down from the level. All right, so hopefully that makes sense. And I'll explain to you guys in just a second. All right, guys. But yeah, let me catch up with the chat here. So if we created a lower low on the higher time frame, does that mean that we're more likely to create a lower high and go down? Well, you need to be a little bit more detailed behind that question, right? Have we taken out the level of liquidity? What's the trend? How's the volume looking like? All right, you got to ask yourself those questions. It's not only the market creating higher highs and higher lows. All right, you need to be asking yourself very important questions, most importantly being the drawn liquidity. Have we taken it out? What's the reaction in the market? Are we rejecting? Are we still going up? All right, that will tell you what the actual trend / bias will be. All right, when you do the inverse setup, do you only use it on the 5-minute time frame? No. I prefer the 5-minute time frame, and the reason I'm saying I prefer the 5-minute time frame is because that time frame, in my opinion, is not too long but not too short, right? It's not too long to the point where we have to wait 15-30 minutes for one setup to even form and close, but It's also not too short. Like on the 1 minute time frame where the candles are way too small, they're way too hectic, too much is going on, and you know what I mean, we just can't work off that. So in my opinion, I personally prefer the 5 minute time frame, but you could use the 1 minute, the 5 minute, the 15 minute. You can even use the daily time frame if you want. You know what I mean? The time frame doesn't really matter. The setups are just there. But obviously, the higher the time frame, the longer the setup will take to play out. You know what I mean? The confirmations and everything, just because you have to wait a long time for those candles to go ahead and close and confirm it for you. All right. But anyways, guys, so pretty much coming into back to the setup, right? So yeah, I was pretty much looking to take short before this candle took out the level of liquidity above. But the problem was, guys, that we just never ended up taking out the, we never ended up sweeping the level of liquidity. So in this case, guys, even though wait, hold on. Let me hold on, give me a second, guys. There you go. Anyways, so even though we took out the level of liquidity above over here, you guys would imagine like, hey, shouldn't our bias be bearish now that we took out our level of liquidity? To a certain extent. All right, guys, and the reason I'm saying to a certain extent is mainly because, guys, remember, when we take out a level of liquidity, this is the part where you guys have to lock in the most on the chart, right? You need to lock in and pay attention, very, very close attention to the charts and really see what the market wants. Okay, we took out a level of liquidity. Are we trying to reverse it back down and sweep the level of liquidity? Or are we gonna continue going up and hold above the level of liquidity? All right, once again, if we hold below it after the level of liquidity has been taken out, then your bias is gonna be bearish. All right, you're gonna be looking for shorts. Why? Because the market trend is reversing. But if we take out a level of liquidity with a lot of buying pressure, like this example, and after price takes out the level of liquidity, we're still going up, your bias is going to remain bullish. Keep in mind, guys, it's going to remain bullish as long as price holds above the level of liquidity that it's taken out. All right. And you're going to remain bullish until the next level of liquidity gets taken out above, right? So in this case, since this candle right here has a lot of buying pressure and we're holding above the level of liquidity, your bias will remain bullish until we take out this London high above up here. All right. So remember, it's two key things. You will remain bullish as long as price never holds below this internal high drawn liquidity after it's been taken out, and you'll also remain bullish until we take out this next level of liquidity, which would be the London high. And then you're going to ask yourself the same question. Okay, we just took out the London high. Are we going to hold above it to go even higher, or are we going to start holding below it to then sweep liquidity and go back down? All right, guys. So yeah, in this case, like I said today, man, I really wanted to take longs off this, but we just couldn't afford it just because there was so much buying pressure kicking in. I just couldn't find a good entry off longs right here. So I just waited for the next setup to go ahead and form. All right, guys. So which I'll review right now. All right. Do you ever consider opens and closes of the session as areas of liquidity? Good question. Good question. Yes, in a way. I actually have an indicator which I don't know if you have marked out or not, which pretty much just tells me the highs, the highs and lows of the session. I don't mark out opens and closes as levels of liquidity, but I do mark out the highs and lows of those sessions as levels of liquidity. So hopefully that answers your question. All right. So yeah, instead of doing open and closes, I just do highs and lows of that certain session. All right. But anyways, man. So anyways, guys. So pretty much what we have here, guys, is since obviously we can't work off longs down here since the market is way too strong right now, and we obviously can't work off shorts off here because obviously buyers are in way too much control, then our only choice is to see what we can work with somewhere up here. All right. So anyways, on the 5-minute time frame, right, guys, going forward, on the 5-minute time frame, we don't have too much to really work with anywhere here. You know what I mean, there's no gaps here. There's just red candles with some wicks, nothing crazy, right? But what do we do when we don't find anything on the 5-minute time frame? Well, we move on to the higher time frame, which would be the 15-minute time frame. I like to consider the 15-minute time frame as a plan B. All right, obviously we always try to stick to the 5-minute time frame, but if we don't find anything too good looking on the 5-minute, we'll always move over to the 15-minute time frame instead. All right, so if we go over to the 15-minute time frame, guys, pretty much obviously right now, our bias, like I said, guys, as long as we hold above the level of liquidity and we haven't taken out this one above over here, our bias will remain bullish. All right, guys. By the way, let me catch up with the chat here. Okay, thank you. I got you, my man. David is an awesome teacher, always improving his game. Much love, my man. Much love, much love. I'm just trying to get you guys to improve as much as possible. Hopefully this challenge will help you guys out a ton. Like I said, I know today wasn't the best day, but don't worry, man. I got you guys always. You know what I mean? And that's why I'm doing this review, so we can all learn from our mistakes and not make it again. All right, man. We always got to be held accountable for every loss that we take, and we always have to learn our lesson. You know what I mean? But anyways, guys. So yeah, coming into the 15-minute time frame, I know that on the 5-minute time frame, we didn't really have anything to really trade, but to the upside, right? Because remember, guys, right now we're looking to take longs anywhere around this range, below this price and above this price. We're just trying to look for something around here to then trade into here. All right. So since we didn't have anything on the 5-minute time frame, we have two very nice opportunities to take longs on NQ. All right. Those two very nice opportunities are this one right here, and I'll explain to you guys in a second as to why, and this one right over here. Right. These two candles right here, or these two zones that I just marked out, these are fair value gaps. All right. And now the reason I'm saying these are some valid fair value gaps is because if you guys measure both of these fair value gaps, each and every single one of them will be well over 40 points, making it a valid imbalance in the market. All right. So if we measure out this one right over here from the top to the bottom, it is about 45 points, which is beautiful, right? 5 points more than an imbalance, which is amazing, right? It counts as a valid fair value gap. Now, we also have one right above it, which is, if I'm not mistaken, maybe about 52 points right over here, right? Now, here's the next kind of like obstacle behind the charts, right? What's a fair value gap? Oh man, that's something to explain like a lot, bro. Bro, what I suggest to you, man, is go over to my channel. Under the main videos, I have so many videos on what a fair value gap is, how to trade it, how they work, and you know, the whole 9 yards, man. All right, so yeah, whenever the stream is done, because obviously I don't want you to be missing out on a bunch of education here. After the stream is done, go to my channel and just watch those videos. They're like 20-ish minutes long, but it's filled with value, bro. I'm sure you will learn a lot from it. All right, my man. But anyways, thanks. I got you, bro. I got you. Anyways, guys, so pretty much what we have here, guys, is two fair value gaps. All right, now, like I said, this is where the next obstacle comes in the charts. All right, guys. Let me see. You explained it hella well. Everything makes sense. Thank you, bro. Thank you. Thank you. All right, or I don't know if I should say thank you or I got you, but either or works. All right, anyways, guys. So yeah, here's the next obstacle in the chart. All right, we have two fair value gaps. Let me see. I tried buying your subscription for a month. I'm assuming the premium, the premium for a month, but it took my money instead and said my bank failed. Is that normal? Go ahead and DM me on Discord, or send me your Discord username. I'll check it out for you and I'll give you the rules instantly so you can check out everything. All right, Moises, I think that's your name. I'm not sure. Maybe WAP had a glitch or something. I don't really manage the payments, but let me know. Give me your Discord username and I'll fix it for you literally right now. All right, I don't want you to be having any trouble. All right, but anyways. So what we have here, guys, is we have two fair value gaps stacked right on top of each other. This is where it gets very, very tricky because a lot of you guys might be wondering, okay, well, which fair value gap do I take the entry off of? Will it be the first one or the second one? All right. Well, here's the thing. All right, guys, pay attention here. All right. When we're taking a continuation model, which for those that don't know, what a continuation model looks like from a fair value gap is typically we go into the fair value gap, we hit the midpoint and we go back down, right? I like to call it a continuation fair value gap or a regular fair value gap. But if you're looking for an inverse pretty much looks like this, right? Where you go into the fair value gap and you just break above the gap, right? You just inverse the gap, right? So instead of rejecting back down, you're just breaking above it. All right. So guys, when you're looking for an inverse of a stacked fair value gap, which looks like this and like this, right, where we have one right here and one right under it, right, is when you guys are looking for an inverse, you're going to make sure to inverse that price inverses both or maybe triple of the fair value gaps that has. Because I'm not going to lie to you guys, there have been times where there's been 3 fair value gaps stacked right on top of each other. When you guys are looking to take an inverse, you're going to take the final inverse above. So in this case, guys, if we're looking to take longs from this right here, since our bias is bullish, we want to be taking longs from the complete top right over here, which will look more like this, right? You'll place your long position right here, your 30-point stop loss, just like this, and have your position placed just like that, right? This is how your trade should look like, off an inverse, off a stacked fair value gap. Let me explain. All right, guys, the whole reason as to why I'm telling you to make sure to inverse every fair value gap first is because, guys, if you take the entry off this fair value gap right here and price goes up literally 5 points, right? You're entering the next fair value gap. And what happens when you enter the next fair value gap? Well, you're running another risk of price rejecting off this fair value gap and going right back down into your stop loss. All right, so here's the thing. You could enter off this fair value gap, but it's riskier. So here's the pros and cons behind both of these, right? And by the way, guys, I'm gonna catch up with the chat in just a second. Give me one sec. Give me one sec. All right. So, guys, in this case, right over here, right, what we have here is if you enter off this fair value gap right over here, right, sure, you might be getting an earlier entry, which equals more money, but you're going to be risking a lot more, which means you're also risking a lot more money behind the trade. Because once again, if we inverse this fair value gap and you take longs and we go into the next fair value gap and we reject off this fair value gap and go back down, you're going to get stopped out, right? So this entry right here would be considered a very risky yet very early entry. But if you go ahead and enter off this one, you would get a later entry, right? So you're gonna get a higher entry. So you're probably not gonna make as much money. Obviously, you'll still make money, but you probably won't make as much money when the price hits your price target compared to this one right down here. But hear me out, right? Because if you enter from the later entry, you're gonna get a way more confirmed entry, right? You're not gonna be as doubtful behind your setup, because you're gonna be like, okay, well, we have a lot of buying pressure. We inverse not one but two fair value gaps, and we don't have any other fair value gap above that could possibly stop me out. So right now, it's pretty much just the entry and the price target, right? There's nothing stopping us until then. All right. So I like to think as me paying, like, okay, if you guys, it's like a well-known life lesson, guys. Like, if you guys buy cheap stuff, it's gonna be more expensive if you think about it. Like, if you buy a cheap car, it's gonna be way more expensive with the maintenance, right? But if you buy a more expensive, well-maintained car, it will be just overall better, right? In this case, it's pretty much the same exact example. If you're gonna be entering off this, sure, you're entering at a cheaper price, but you're running a way bigger risk. But if you enter here, you might be entering at a later price and pretty much paying the price for entering for like more confirmation, but you're getting more confirmation behind the trade and making you be more confident behind the trade, if that makes sense. So for me, I love to put out only A++++ setups, like the setups that in my opinion are literally perfect. And in my opinion, I don't want to be giving you guys risky entries right over here and kind of gambling it, right? And so instead, with this trade, guys, I pretty much just waited for price to go ahead and break above both of these fair value gaps, just like this, right? And I've ended up getting my entry right over here, right? Just like that, with my 30-point stop loss, which, let me go ahead and move it up a little bit, right there, right? 30 points, right? And then obviously my price target will be the London high and the Asia high above. All right, can we answer now? All right, bro, come on now, bro. The markets are, oh, actually, no, the markets are opened. Which, keep in mind, guys, don't leave the stream just yet, because, guys, after this review, I'm gonna be reviewing the setups that I'm seeing for tomorrow, just so we're well organized. All right, guys. But anyways, so yeah, right now, guys, pretty much what we have here is the entry, right? We got the entry all good. Now, I'm gonna ask you guys in the chat. Although this setup looks perfect, we have a ton of buying pressure kicking in. We have the inverse off the two fair value gaps, and the price target is right around the corner. What do you guys think went wrong behind the setup? And look, I'm gonna zoom in for you guys. Look very closely. What do you guys think went wrong behind the setup? Why do you guys think we got stopped out, due to the chop a little bit here? All right, why do you guys think we got stopped out right here, man? It's something that we knew about, but we kind of ignored the red flags. Well, I'm not gonna say that it's a choppy market, but like how the benchwarmer said, also nice name, bro. But yeah, like how the benchwarmer said, the market was extremely overbought, guys. I know, I get it. The setup looked amazing. I mean, the bias was bullish. The momentum was bullish. We had a ton of buying pressure kicking in. We inversed all of the fair value gaps, and the price target goes right around the corner. Why did the setup not go in our favor? Well, it did, right? It did. Because if you go ahead and pay attention here, guys, it hit all of our price targets towards the end of the day. Check this out, guys. Right? So what did we do wrong? Well, guys, we didn't do anything wrong on our end. In a way, like 50-50, right? It's more 50% our fault, 50% the market's fault, right? Because, guys, The reason I'm saying it's 50% the market's fault is because unfortunately, guys, right as we entered, the market got very, very choppy. Keep in mind, we're on the 15-minute time frame, and look at how the candles are looking like, man. This looks like the 1-minute time frame. You know what I mean? It looks very, very choppy, very, very ugly, right? Not tradable at all, right? But it's also our fault in a way because, guys, we got to keep in mind that we took longs right over here after the market pumped well over 175 points. So that's way too much, man. You know what I mean? Like, we're taking longs after the market already finished. I mean, already kind of did its job. You know what I mean? It just makes no sense. You had a late entry? Nah, I wouldn't say I had a late entry. I had a pretty good entry. I liked where I entered. But the entry wasn't the issue. The issue was we entered longs after the market pumped over 175 points. You know what I mean? It's you know what I mean? Now, were we wrong on our buys and our read? No, we weren't. We were just a little bit wrong on our timing for the entry. All right. So the reason I'm saying a little bit bad on the timing of our entry is because, guys, like I said, the buys played out. Remember, guys, we were looking to take longs to trade into the level of liquidity number 1 here and the level of liquidity number 2 here, the London and Asia high above, right? Which did get hit literally as the market was getting closer to the market close, right? But here's the thing. We entered after the market already pumped over close to 200 points. So obviously a retracement is needed, guys. It's a healthy retracement, and we knew it was going to happen. But the thing is, we knew it was going to happen after we entered. It's something that, you know, we're all human. It happens. You know what I mean? Sometimes we look at something in life and we're like, damn, bro, I should have waited. You know what I mean? Like, you realize stuff as you're looking at it, you know what I mean, or as you do it. So that's my mistake on the market today, man. It's a mistake that we could have definitely avoided if I was kind of paying attention a little bit more. But man, we learn from our mistakes, and we'll come back from it. You know what I mean? But yeah, now, were we wrong in the market? No. In fact, we were actually very right in the market, right? In fact, we were right before the market even opened, right? Because remember, guys, our bias was bullish because of this level right here getting taken out right over here. Right, we were bullish since like all the way down here, right? The thing is, we couldn't find an entry anywhere here, and the only entry we had to work with was this one right over here. But the problem was, guys, is we pumped up way too much to the point where the market needed a retracement. All right, and that's exactly why we got stopped out, guys. Very unfortunate, but very avoidable. And obviously, guys, like I always say, man, in order to be a good business owner, in order to have a successful company, you guys have to understand that mistakes will happen and you need to learn from them. If you guys are always playing victim and always blaming anything but yourself, you're never going to learn and you're never going to grow as a trader or even as a business owner in any business in the world. All right, guys. So yeah, our mistake on this trade here, I'm going to take the full accountability for the loss. You know what I mean? Like I said, the bias was correct and we did nothing where we didn't really do anything wrong in terms of bias and reads in the market. Just our entry could have been timed a little bit better. We could have found a little bit of a retracement instead of an inverse above. But it happens, man. It happens. You know what I mean? Much respect for going over this trade. Thank you, bro. Thank you. And typically, I like to go over them by myself. I like to kind of learn from my own mistakes. But I'm going to start going live maybe, I don't know about every day, maybe every 1 or 2 days to kind of review the charts, you know, whether we catch a trade or not. We can always look through trades that we could have caught and just be more aware for the next day and, you know, so on, right? But yeah, guys, this is pretty much what ended up going wrong with the first trade today. And for those wondering how much I'm down today, if I'm not mistaken, I think I'm down about not 200. I think I'm down about $600 per account, which honestly is really recoverable. I'm not mad about it at all. All right, guys, I know I can make it back tomorrow and way more. I'm confident with it. All right, but anyways, let me catch up with the chat here before we get into what's it called? Let's get into the what's it called? Oh yeah, the setups for tomorrow. The setups for tomorrow. All right, give me a second, guys. Let me catch up with the chat here. Hold on. Let me let my cat out. 1 second, guys. Give me literally 1 second here. All right, man. I don't know if you guys heard the meowing, bro, but yeah, she's done it over. All right. Anyways, let's see what we got here. All right. let me catch up with everything here. Let me see. Your entry was literally top tick or short. Yeah, bro, I get it, man. Now, is top ticking an entry embarrassing? No, bro. I mean, once again, guys, we had our model. We had everything here that looked really good. Am I mad at myself? No. Should you be mad at me or yourself for taking this trade? No. I mean, guys, we had everything lined up and the chart looked amazing. In fact, it literally played out. Like, once again, it literally played out into all of our price targets. The only thing is, guys, it's just very bad timing on our end. We just got a little bit unlucky with the market pulling back because it pumped close to 200 points. You know what I mean? It happens, man. But don't beat yourself up because of it. You know what I mean? So yeah. Let me see. Why didn't you just enter off the first internal high? Because there was no entry anywhere here. There was no entry anywhere. We never got a retracement. We just pumped up. And you guys know me. I don't enter off just pumps, random pumps like that. You know what I mean? I'll always try to find a setup. You know what I mean? But yeah, let me see what we have here. I have $200 left before my account gets blown. What should I do tomorrow on the challenge trade? With $200, bro, you can recover it back. I would say it's healthy if you do like 3 to 4 contracts. Get a few winning trades, build up the buffer, and then as you build up that buffer, just size up on the account, and then you're gonna make more money, and then just try to go to break even. That's what I would do. All right. But yeah, just like how Austin said, size small and try to build it back up. I would say do about 3 contracts. If you want to be a little bit risky and do 4, so be it. But yeah, I would suggest do 3. All right. Let me see what we have here. Let me see. How similar is your strategy close to RP profits? I just found out about you through his server. Huge shout out to RP, man. He's the GOAT, man. But I don't really know what RP trades. I'm gonna be completely honest with you. I do know he trades break and retest. I don't really do break and retest, so I don't really think my strategy is super similar to his. But you can study both of our strategies and kind of compare them. But yeah. Have you traded the 15-minute opening range? Yeah, I used to trade the 15-minute opening range when I used to do options. It's a beautiful strategy, but man, your stop loss is very, very, it's hard to keep track of. I won't lie. Now the reason as to why I don't trade the 15-minute opening range, which is the opening range breakout strategy anymore, guys, is because, guys, I like to have an outlook of the market. I like to have an understanding of what the market is doing and why it's doing it. And guys, trading the opening range breakout doesn't really give you too much of an understanding in the market. It doesn't tell you what the market is doing, why it's doing it, and where it wants to go to. You're just trading just a simple breakout, which a lot of times is a fake out. All right, and wait, give me a second, guys. Let me open my door. Man, bro, she's asking for attention, bro. Anyways, but yeah, I just don't like or not that I don't like it, I just don't prefer that strategy. You know what I mean? But yeah. Anyways, let's see what we got here. Um, when did I get my last payout? Honestly, I think like what, maybe 3 weeks ago. I think I requested around there. I never posted on Discord, but I can post it if you guys want. But yeah, I think if you utilize a bookmap, you would go crazy, bro. You don't understand, man. I'm not gonna lie, man. I've been saying that I want to get into bookmap or add it into my strategy for the longest time. I'm not gonna lie, bro. I've been a little bit lazy, bro. I'm not. I look full honesty, bro. I've been lazy, bro. I haven't been trying to learn anything new, bro. Cause, guys, when I get into my learning phase, bro, I lock in like crazy, bro. Kitty is mad, yeah, bro. She won't leave me alone, bro. Anyways, thank you for your opinion. Of course, man. Of course, I got you. All right, David. Do you always trade with a 30-point stop loss? Yeah, I do. I do. How have you been mentally, bro? All right, bro. I don't know if you guys saw, but on Friday, guys, bro, I couldn't keep it together, bro, because I had a friend recently, passed away. So it hit me a little bit hard, but you know what I mean. You know this is how it is, man. That's the way life goes. So yeah, on Friday, as much as I wanted to trade, and in fact, I would have literally given you guys. I saw it was a 55-point trade. I could have given it to you guys, but man, I was not feeling it, bro. So I just got off. But it happens, man. If you guys are hearing this, man, hug your close ones, bro, because you never know, man. You really never know. What's bookmap? Pretty much what bookmap is okay. So to the retail traders, we look at candlesticks, right? We look at like green and red boxes, right? But obviously, guys, there's so much more that happens inside of these candles, right? We're talking numbers, we're talking math, we're talking orders, entries, stop losses, partial orders. All of that stuff is happening inside of the candles. So what Bookmap does is it shows you pretty much what's happening inside of the candle. You get more of an understanding as to what's happening in the market. You know what I mean? So hopefully that makes sense to you. That's the best way I can explain it. All right. But anyways, guys, let me go ahead and start cleaning out my chart because I want to review the setups that I have for tomorrow. All right, guys, so we can get this done and ready. All right, man. But yeah. Anyways, I'm gonna clean out my chart completely so we can have a brand new chart. And if you guys obviously want to follow along, you guys definitely can. If you guys go over to trading view and search up NQ1 exclamation mark, this is the chart that you guys are gonna have. All right, guys, we're gonna be preparing this chart completely for tomorrow. So get ready to mark everything out. All right, don't worry, guys. I'm gonna try to go slow because I know I talk a little bit fast. But I'm gonna try to go slow and explain why I have every single level. All right, and what setups we're looking at and why and what to expect. All right, guys. Let me see. How do I check if I have a 30-point stop loss on Top Step? It's pretty simple, bro. I mean, if let's say for example you enter at 23,000 exactly, your stop loss, you just put it 30 points lower than your entry. You know what I mean? Just do a little bit of math, subtract it from 30 points, your entry from 30 points, and place your stop loss there. All right. But yeah, after I get my payout, I'm gonna get a matching Corvette, bro. Don't let me down, bro. Don't let me down, bro. You already know, bro. I'm always rooting for all of you guys for the most success possible. You know what I mean? It's why I show up every day and try my best for you guys, man. Cause dude, look, if I succeed, man, I want my whole community to succeed. You know what I mean? Keep your head up. Nah, bro, don't worry, man. I'm doing fine, bro. It's just I just needed a day off to really process what happened, bro. And it's really sad, but that's just how life goes, man. You know what I mean? I know he wouldn't want any of us, like any of me or my friends, feeling down and not putting work to the money. You know what I mean? So I gotta keep pushing. Let's see. Let me catch up with the chat. Okay, yeah. You took an L today? Yeah, man. A little bit of a small L today. I like to consider it a small L. It was a 30-point stop loss L. Nothing crazy. But yeah. Anyways, okay, so guys, so let's get started for tomorrow, right? So guys, this is literally a real-time chart. I do see some setups for tomorrow that I am actually loving that we created today. So let's get this started. All right, guys, let's get this started, man. All right, so obviously, first things first, guys. The first thing that we always want to be doing, guys, is always start off on the higher time frame. All right, guys. So in this case, we're gonna be starting off always, guys. Remember, we're always gonna be starting off on the 1 hour time frame. When you guys have a blank chart and you guys don't know what levels to mark out, start off on the higher time frame. Mark out your highs and lows, which will be right here and right here. This will be our first two highs and lows right over here, right? I don't know if I have water here. But yeah, we're gonna be marking out this one and this one, right? These are gonna be the two levels that we're gonna get started with. All right, guys. So I'm gonna give you some time to go ahead and open up your chart and mark these levels out. And in the meantime, I'm gonna go ahead and label them. All right, so this will be our, I don't know if this is this all-time high? No way. It is. Okay. Well, yeah, this will be our all-time high level right over here at 23,845. So we have all-time high DOL, just like that. All right, now from the all-time high level of liquidity, obviously we sold off, pulled back from this high, which would be an external high. All right, so let's go ahead and mark out this level of liquidity, external high DOL. All right, then the market sold off, pulled back from this high right here, which we'll label as an external high drawn liquidity. Right, and then the market sold off once again from this high right over here, which would be another external high. For now, right, we're gonna label this as an external high DOL. All right, and we're gonna label this as let's label this as the New York low, because this is the New York low from Friday. So New York low drawn liquidity. All right, let's put this down here. Okay. Okay, so on the 1 hour time frame, from the most obvious levels or the most clear levels that we can see here, we have all-time high, external high, external high, external high, New York low. All right, do we have any more obvious lows that we can mark out? At least on the higher time frame, not really. Well, I'm gonna mark this one out just for now, which will make more sense in a second. All right. So, and keep in mind, guys, I haven't really looked at the chart. I know we have setups, but I haven't looked at the charts too much in terms of confirmations. So if you guys hear me kind of like mumbling words, it's pretty much, if I'm not doing it on stream, guys, I'm not gonna lie to you guys, man. I talk to myself a little bit, like when it helps me concentrate. So like I'll be charting, I'll be on the charts and I'll be like, okay, well, we have this level here. Okay, let me mark it up. Stuff like that. So if you guys hear me doing that, it's just know that I'm extremely locked in right now and I'm just focused on the charts. You know what I mean? So yeah. Anyways, so yeah, let's go ahead and mark out this level right here. This is gonna be our Asia high drawn liquidity, which we just actually took out right now, like maybe 20 minutes ago, maybe. Asia high drawn liquidity, right? So we have this one right over here. Okay. Let's see. In fact, we're not so far away from, actually, it doesn't seem like we're far away, but we are far away from all-time high. Okay, so we have the Asia high drawn liquidity, which in fact we just took out right over here, which will make sense in just a little bit from here, guys. Now we have, let's get started from down here, right? So we have the Asia low right down here. Asia low, DLO. Right, and then we have the London low, which I'm gonna go ahead and mark out on the 15-minute time frame right over here. London low drawn liquidity, right? And then I want to mark out this one as an internal low. Now the only problem is, guys, with this chart, or to the pump that we got throughout the overnight session last night, is we got a nice push up, but the thing is the push up wasn't really as aggressive, which just makes finding levels of liquidity very, very hard, because the candles are like hidden and like kind of like camouflage with the small candles, right? So you're gonna have like a million small candles, and you're gonna have like this little mini big candle, and then back to having small candles. So finding these levels of liquidity on the higher time frame just makes it so much harder, man. But yeah, let's see here. So we have the New York low, Asia low, London low, internal low. Let's mark out this one as a, this one was created, this will be an internal low right here. So internal low drawn liquidity, right? And then on the 15-minute time frame, we have a nice fair value gap right over here. So let's mark this one out right like that, right? Not so bad. It is a little bit far, I will say, but it doesn't look so bad. And I'm not gonna lie to you guys. Yo, wait. The Asia session is low-key moving a lot here. I'm not gonna lie, yo guys. I don't know. I'm not gonna lie. I'm gonna hold myself, man. I'm gonna hold myself back. I was thinking, I'm like, yo, we could probably get a trade during the Asia session, but nah, man. I'm not trying to trade Asia right now, bro. It's so slow. I hate it, bro. Although we do have a nice setup, I will say, but nah, man. It's looking good. Nah, bro. Don't tell me, bro. Don't tell me, bro. Nah. Chill. Nah. I'm not trying to do that, bro. Not right now, bro. I got shit to do, bro. Anyways, man. What I was gonna say, bro, was okay. So we have the internal low right here, and on the 15-minute time frame, we do have kind of like a pullback here, which I will label as another internal right here. Let's go. Nah, bro. Nah, I'm not trying to do it. Well, I'll consider it, man. I'll see how the market moves right now. Internal drawn liquidity right over here. What more do we have here? Because guys, what I was I'm not gonna do it. Wait, hold on. But what I was thinking, guys, was we took out the London, we took out the Asia. We're sweeping the level of liquidity. We're seeing a little bit of selling for Asia stepping in, and we have both a 5 and 15-minute fair value gap right here. Right? Look, it's a 53-point gap on the or candle or imbalance on the 15-minute time frame. And if you look at the 5-minute time frame, it's a 46-point candle. Oh man. Why does it have to be during Asia, bro? And we're right in the middle. Because I'm not gonna lie, guys, we low-key never mind. We're 42 minutes into the session, and we've dumped 43 points only. So guys, even if we do get this entry, bro, it will take literally decades to even see the first price target, bro. I wouldn't want to do that, man. Nah, no peer pressure. Nah, bro, you're chilling, man. I don't know, bro. I'll see. If anything, I'll just do commentary behind it. But dude, I do not like trading Asia, bro. Anyways, guys. Okay, so for tomorrow, let's focus more on tomorrow. Forget about the trade, right? Anyways, for tomorrow, I mean, this could be a working setup for tomorrow. I doubt it, but I doubt it holds until tomorrow. But you never know. Right? So for now, what we have here is right here. This is a setup that I wanted to see, right? Because guys, hear me out, right? So we have that one right there, and then we have, but that's far. Let me see. 1 sec. Because if I'm not mistaken, do we have one on the 5-minute? No, we don't. Okay, so okay. So guys, what we could do here for tomorrow is, depending on if we're bullish or bearish, we have, let me see, could that have been a pullback into the fair value gap and keep going up? Why did you want to say it's going to go down? Let me explain. So the reason as to why I would like to take, I'm not saying that I will, we're in an uptrend too. Well, keep in mind, guys, remember the whole reason as to why the market is going up is to take out the objectives, right? Now that we took out the objective, which was the London low right here, right? Or the London high, my bad. Now that we took out the London high right here, and we took out the Asia high right here, right, guys, remember, the whole reason as to why the market goes up is to take out the objectives to the upside. Now that we took out the objective to the upside, which is these two levels of liquidity, what are the chances that we continue going higher? Well, they're definitely not as high as they were over here. You get what I'm saying? So we could definitely start leaning more towards bullish here, based off a level or a DOL sweep right here and an MSS model forming on the smaller time frame. You get what I'm saying? So we can look into that tomorrow, right? But it depends. It depends. Obviously, it depends on the overnight session. So what we could do, guys, is if the market trend wants to be bearish, like if we want to turn bearish from here, right? Let me mark it out for you guys. One sec. Look, let me show you. Because what we could do is we have the level of liquidity right here. Hold on. That's too small. Yeah. Check out the Asia high here. Deal sweep. Right, guys. So what's going on here is we have the Asia high right here. We took out the Asia high. Buyers are getting very weak. Sellers are stepping in here. We're holding below the level of liquidity, pretty much meaning that price is now sweeping the level of liquidity. And on the smaller time frame, like the 1 minute and the 5 minute, we're creating an MSS model, right? So we're going from creating higher highs and higher lows, which will look like this. Wait. Which will look like this, right? Starting from here to like here, right? Our MSS here is bullish, right? The bullish bias, right? But now that we took out the level of liquidity, what are we doing here? Well, we're kind of like pretty bearish here, right? The market is kind of like creating new lows and all that good stuff. Yes, this is swept. Oof. You're right. Yeah, it's literally right there, bro. Good point. I mean, good thing that we're not really trading it tonight. You know what I mean? Because that'll be a whole headache, especially with the volume being so slow. But yeah, we could probably do something like this, right? So we can start expecting to be a little bit more bearish, at least for the overnight session. So guys, what we could do tomorrow is, obviously we all know that this fair value gap is not going to hold up for like 12 hours or more, right? The market opens in 15 hours, 14, 15 hours. We're not holding this fair value gap. Like the odds are literally zero. Like whatever. We're not going to hold this fair value. But guys, if we do want to end up selling off, what we could do is, obviously we have the confirmation right here that we took out the level of liquidity. We're sweeping it. Sellers are stepping in, and we have the MSS model forming right here, right? From bullish to bearish, right? From bullish to bearish right here, right? Bullish to bearish right here on the smaller time frame. What we could do, guys, is we can wait for very strong selling to come on throughout the overnight session. Then we come into the New York session tomorrow. We inverse this fair value gap right here, and we could probably look to take shorts like this. Like 35 points. Let's just say 35 points. We could look for something like this into like everything down here, which I don't really think we're going to see yet. But obviously, we're not going to see all of these levels of liquidity, but we could definitely see like something like here and like here. You know what I mean? But yeah, that wouldn't be so bad, I would say. What do you guys think? This wouldn't be a bad setup at all. Because yeah, we can look for an inverse here, and if we have enough selling pressure, we can even look for an inverse here. But that's only if the selling looks really, really good. That's if London doesn't surprise us. Yeah, man, you never know, man. Now, let's say that we don't end up holding down this sweep, and we end up going even higher. What can we do? Well, what we could do, guys, is if we end up going even higher, keep in mind that we have a 15-minute fair value gap right over here. If you guys want to mark it out, it's from 23 480 to 23,535. I see a 1 minute FEG holding in there. Nah, bro, forget about the 1 minute, bro. The 1 minute is not gonna hold for the next 14 hours, bro. Forget about the 1 minute. All right, we're focusing more on the higher time frame to kind of get an idea as to what to expect tomorrow and what trades we can get for tomorrow. So if anything, guys, what we can do is, the thing is, I wouldn't want to look for an inverse off this fair value gap right here. Depends. It depends, right? Obviously, it's really hard to tell because we don't know what reaction we're getting off this external high drawn liquidity right here. But I mean, if we take out an external high level of liquidity right here, and we can, you know what I mean? Like, if we take out this high right here, wouldn't we expect a sweep back down? Because why would we look to take longs after we take out a level of liquidity right here? I mean, it could happen if the buying pressure looks really, really good. Nah, I mean, there's nothing wrong with the 1 minute. But keep in mind, guys, keep in mind, the 1 minute is for entries. Like, the 1 minute is if you want to enter right now. You know what I mean? But the 1 minute for tomorrow is, like, the 1 minute right now won't be valid for tomorrow. Like, that thing is not holding up. You know what I mean? But you're good. You're good. Hey, David, I noticed back then you used to not like trading fair value gaps older than 1 day. Now you're open to trading some older ones. Is there a reason for that? Not really. I mean, I've been a little bit more open to trading fair value gaps. Now, do I see the same results as the cleaner ones? Honestly, no. I still prefer trading newer fair value gaps. But if there is, like, let's say, for example, right, the bias looks very, 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 very very clear to that certain direction, and we have a fair value gap that was created like 2 days ago, you could still take it and it'll probably still work out in your favor, but not all the time. Not all the time. You know what I mean? So hopefully that answers your question. But yeah, anyways. So yeah, guys. So if we pump up tomorrow, for now, I guess the setups that we want to be looking out for is mark out this one right here. Keep in mind, all of these are on the 15-minute time frame. So mark out this fair value gap right here. Mark out this fair value gap right here. Mark out this one right here, which I don't really think is going to be too valid for tomorrow. You never know, but, you know, mark out this one right here, and then mark out this one right over here on the 15-minute time frame above. All right, guys. I'm going to go get water real quick. So, guys, mark it out real quick, and then I'll give you guys the game plan as to what to expect from each and every single fair value gap on the screen. All right, guys. So, real quick, guys, go ahead and mark out, or if anything, I'll just link you guys my chart. How do you link it? Right here, copy link. I'm gonna send my chart over in the chat. If you guys want to go ahead and click the link, and just save the chart for yourself, so you guys don't have to do the extra work. But I'm gonna go get water real quick, guys, because I've been talking for the last 66 minutes without stopping and drinking water. So I'm literally dying here. Give me 1 second, guys. Stay on the stream for 1 second, guys. I'll be back. 1 second. 1 second. All right, man, I'm back. Bro, drinking that water, bro, the Benjamin rip. Oh, hell no. Bro, drinking that water, bro, is the best thing ever, man. Let me see. It's okay. I'm new. Bro, don't worry, bro. Bro, Russell, if anything, bro, you should be the one asking the most questions in here, bro. Keep spamming those questions. You remember, bro, I'm here to help you, man. All right, guys. So, yeah. Anyways, okay. So, yeah, hopefully you guys were able to mark out your charts here. All right. But yeah, anyways, so like I said, I guess for tomorrow, what we have to work with right now are these levels of liquidity right here. The reason I have this one marked out right now, even though we took it out, is to get more of a read. Send the screenshot to Discord. I will. Let me send it over right now. Give me 1 second. I'm gonna send it over in the trading chat for you guys. All right, man. Let me see. There you go. Chart for tomorrow. There you go, guys. For now, right? But yeah, anyways, let's see. From the stream. All right. Anyways, so yeah. So guys, what I want to see for tomorrow is a few things, right? if the market wants to continue going higher, we can use this. Think of this fair value gap right here as more of like an unbiased fair value gap. It could be bearish or it could even be bullish, right? Now, I would probably be more bearish from this fair value gap just because if we take out this level of liquidity, we more than likely might want to go down a little bit. So we could probably look for an entry off this fair value gap to go down. But if that's not going to be the case, what we could do is maybe look for how buyers react here. Look for how they react here. And if they inverse this fair value gap, there's really nothing stopping us until 77 points above. Or I don't know why I said 77. I think I was looking at another chart. 80 points above. So if we inverse this fair value gap, guys, our first price target is 80 points. This will be an amazing inverse to the upside. I'm not going to lie to you guys. I would actually love this. But that's only if we have an insane, I'm talking about like a buying pressure like from today's open. But I don't know how likely that's going to be. I mean, we have to pump up 300 points to the upside. You know what I mean? That's pretty. Oh, wait. Tomorrow we have PMI. This setup can actually work out. Yo, okay. I'm not going to lie to you guys. This setup right here, it's on the top of the list. This is like the top 3 setups for the day, for tomorrow. All right. Now, this fair value gap right here, honestly, it probably won't be too important. We're probably not going to use this fair value gap here, but I'm going to leave it marked out just in case. You never know, right? Now, this fair value gap, guys. Now, let's say, for example, right, we took out this level of liquidity right here, which is the Asia high over here. Guys, if the market sells off throughout the overnight session and we get that extra selling throughout market open tomorrow, we could possibly look to take an inverse off this fair value gap right over here, right? This gap right over here into our price target, which is 40-ish points. Not bad for a first price target. Not bad. All right. Now, if this fair value gap doesn't work, can we also resort to this one? Probably not. I mean, the reason I'm saying probably not, guys, is because we have a very long way to go, man. We have to go down 230 points to even consider getting an entry, to then dump down even more to the price targets. Nah, bro, that's not happening. Unless, God forbid, which I wouldn't want to happen. Forget about the trade. But like if war starts or something, then maybe this setup would work. But other than that, man, this setup is probably not going to happen. I mean, it's just too far out. The price targets are way too far. The setup is way too large. You never know. Mark it out just in case. But you really never know. All right, guys. But yeah, for now, I would say my top 2 favorite setups for tomorrow right now would be this fair value gap right here, which let me delete this. It'll be this fair value gap right here and this fair value gap right over here. I would say those are by far my favorite right now. But yeah, anyways, guys, do you guys have any questions in the chat? Let me know. Well, I don't really have too much time because I do have to go somewhere literally after the stream. But if you guys do have a question right now, let me know in the chat, man. Let me know. I have some time to help you guys out. And like I said, man, let me know if this stream was pretty helpful for you guys. I want to start doing these pretty often. Just chatting with you guys, no trades or nothing, just charting, reviewing, and just chatting with you guys. I feel like it's a little bit better, just to kind of disconnect from the charts or at least from trading. And get it done. Is this delayed? No, man. What would it be? I'm tempted for longs right now, Blast. Nah, bro. Come on now, man. Don't take longs during Asia, bro. Very helpful. Thank you, bro. Thank you. Let me see. You should definitely do this more often, like a recap of the. Yeah, that's exactly what I want to do, bro. Whether we get no trades or 10 trades, we can still review the charts without a bias and learn from whatever the chart is giving us. You know what I mean? Let me see here. So yeah, I'll definitely be on tomorrow. I'll definitely be on Thursday, and I'll probably even be on Friday reviewing the charts for you guys. You know what I mean? Do you still plan on having an in-person event, bro? I'm dying to, bro. I really want to, bro. I want to build connections with some traders in Miami that I don't know personally, but I do know from social media. Am I, bro? What? No, yo. No, I'm not, bro. But anyways, I do want to build connections with some really well-known traders around Miami to see if we can host some in-person events and kind of get a collab going. You know what I mean? Dude, that was like the most random question, bro. Bro, James, come on now, bro. Anyways, but yeah, CS2 one of these days, bro. I haven't played in so long, bro. But yeah, I would love to, man. This is great and helpful. Thank you, bro. Or I got you. I guess that's the right saying. Can you send the link for the charts for the indicator? Yeah, I got you, bro. I got you. Uh, There you go. All right, let me send it over in the chat. There you go, man. So the person that asked, ZR Cat, I think that's your name. That there's a link for the indicator right there, and here are the settings. Here are the settings, right? So just change these two right here. All right. Let me see. JK super help. Nah, very good, man. I'm 3 days away from another 2K payout, bro. That's what I love to hear, my man. Good shit. All right, W. All right, bet. I'm assuming you got the indicator. All right, bet. But yeah, guys. Other than that, man, I don't want to take up too much of your guys' time. I'm gonna go ahead and send a notification over in the Discord. In just a little bit, I gotta type it up and everything. Pretty much just explaining, like, kind of doing like a little recap or review as to what we did on stream, and I'll just make it in a text format. All right, guys. But yeah, other than that, guys, man, I'm gonna go ahead and get off the stream. And guys, before you guys get off, if you guys are interested in joining the premium, maybe you guys are on the free side or whatever, and you guys want to get access to zero delayed live trading and all that stuff, guys, feel free to click the first link right here that I'm going to send in the chat. And if you guys use this code right here, it'll give you guys 80% off if you guys want to get access to the premium with the alerts, live trading, and everything. All right, can you send the link? I will. I got you. Let me see. Sounds good. I'll definitely be making it when you get it planned out, bro. I got you, bro, man. I got you, man. I want to do it sometime, maybe this month or next month. All right, bro, Russell, I'll see you there, bro. I'll see you in the winning side. But yeah, guys, if you guys are interested in joining, man, click the link that I sent in the chat. And if you guys use code PAYOUT, it'll give you guys 80% off any premium upgrade, man. All right, guys, it's like $10 if you guys want to join. You know what I mean, it'll give you access to real-time live trading, real-time alerts, real-time education, the community. I'm way more active in there as well. If you guys are interested, you know what I mean, all that good stuff. Are you looking for a strong trend during Asia and London to determine if you go long or short the next day, or do you look for a reversal? Good question. Actually, I look for depending on what the like. Okay, so during Asia and London, pretty much what we're doing right now, guys, is we mark out our levels of liquidity. Once all of our levels of liquidity are pretty much marked out, when the next day starts, which will be tomorrow during the New York session, depending on whichever level of liquidity we take out and depending on whichever reaction we get or whatever reaction we get based off that level of liquidity, that's going to determine whether we're long or short. Because remember, guys, just because the trend right now is bullish does not mean that the trend tomorrow will be bullish, right? It could be the other way around, or it could just be choppy. All right. So just because Asia is bullish or London is bullish, that does not mean that New York will be bullish. All right. So instead, mark out your Asia highs, Asia lows, London highs, and London lows, and your overnight levels of liquidity. And then tomorrow, depending on the reaction based off those levels of liquidity, then you get the reaction. All right, guys. So hopefully that makes sense. All right. But yeah. Let me see. What's the name of the indicator? Here you go, my man. Here you go. I sent the link above. Let me send it again. Here you go. All right. But yeah, guys, man, I don't want to be taking up too much of you guys' time. So I got to get to typing up some stuff on Discord so you guys can obviously see the chart and everything. But yeah, other than that, guys, I'll see you guys tomorrow. I'll be on hopefully at 9 if I don't oversleep. But if not, I'll be on at 9:15 a.m. EST. All right, guys. Remember, we're doing the streams a little bit earlier now. All right, guys, so we can be prepared and have a game plan going. So when the New York session opens up, we're ready. All right, guys. So yeah, tomorrow I'll be on at 9:15 the latest. All right, 15 minutes before market opens. All right, guys. But other than that, man, I'll be seeing you guys tomorrow on stream. And yeah, guys. All right, have a good night, man, and please stay safe out there, man. You know, there's a lot of stuff going on in this world, bro. That's how it is, man. That's how life goes. But yeah, man, please stay safe out there, man. Have a good night, guys, and I'll see you guys tomorrow. All right, man. All right, bro. Steve Slow 9. Bro, I don't know what to say. But yeah, guys, I'll see you guys tomorrow, man. All right, take it easy, guys. Peace out, guys.